Hi friend, how is it going? I hope all is well. Hope you are doing good. So welcome back to another episode Trading with Shaka. In today's episode, we're sharing one of the best price action day trading strategy you can ever need in your life. I got to use this if I'm still a beginner because it works in crypto, it works in forex, it works in indices. It's very simple and effective. Anybody can master this strategy within just 8 minutes of this video. And trust me, it's not other video you see out there. The only thing you got to do is to watch this video to the end. Don't skip any parts. Grab your paper and pen. Jot down those information I'll be releasing when I'll voicing in all this things you need to do. So dear friend, if it enters you and you're still struggling, you got to become a profitable trader after this video today. So without taking much time, let's begin. So this simple price action strategy combines three concepts. Number one is market structure, pullback, and candlestick confirmation, advanced candlestick confirmation. So these are the three concepts we should be working with in this very strategy. So we take it one by one, but before we start, you got to know the purpose of this strategy. This strategy is designed to capture impulsive move in the market. For that reason, our preferred time frame would be 1 hour. I remember this strategy works on all markets, forex, crypto, stocks, indices, only if you follow our 2 trading models with advanced entry. But you got to share everything. You don't need to be afraid. We're not leaving anyone behind. So everything you need to become a profitable trader with this strategy is about to reveal to you now. We start by defining the market structure. That's the first thing we got to do. Identify the market structure. The first step is what? Is to go to your indicator. If you're using TradingView, if you're using Go Charting anywhere, even if those people using MT4, MT5 for the listing, go to your indicator, search for EMA, then you set the length or the period to 50, then put it to close. So once you have done this indicator will help you to filter the market structure shift. So wait for the price to break either side of the EMA. That's when the market structure has been set in place. Then we wait for the price to create new high highs or high low, depends on 2 series candle or 4 series candle, the direction of the trend, whether bearish or bearish. When those criteria are available on the market structure, our market structure is defined and in the side. I hope this is clear, but when we go into example, you will understand the reason why we said either side. Now look at the second criteria in the second stage. Second step is what? Pullback. And they have many ways to define pullback. In SMC, pullback need to take up liquidity before you can call it a pullback, but it doesn't work in this very strategy. We only need just 2 candlesticks. If it is in bearish, if it is a bullish, we need bearish candle. If it is in bullish, we need bearish candle. Just 2 or 3 candle, just to help us to optimize our profit. That's the pullback we'll be looking for in this strategy. I hope this is clear. So whenever you find a pullback, just 3 or 3 consecutive candle. Then we'll move to the integral part of this very strategy, which is the essential. That's why it's called advanced price action. We need to tell you more about this candlestick. It doesn't help stop here where you have bearish and bullish engulfing. That's the most common one everybody teach you out there, and it's very simple to decode in your chart. We use this one as well, but we move into advanced one where you know reason why you should be in the market. Maybe your entry or you're entering on the body, you're on long or short, why you should do that using series of candlesticks. So we start by this very example. It's simple, but you need to be technical. as well. That's why I tried my possible best to define it to this extent. So candlestick entry for advanced bearish pattern. This we have sample 1 and 2. We start by this sample 1. Look at the sample. We have an impulsive move. That is our impulse. And after that impulse, this impulse is because you're in an uptrend. Then we have a pullback. A pullback consists of series of bearish candlestick, and we have a swing low. The swing low take out the last bearish candle of the pullback. For that, they engulfed it. Once this is done, and if those things I share with you, the criteria are met in your life chart, that's when you call it bullish engulfing candlestick entry. I hope this is simple. Then move to the sample 2. Same thing happen. Impulsive move, pullback. Have swing low, and that swing low, you notice that the candle that engulfed that last candle that shows swing low did not move down below because it have engulfed it. Hence, you have got it. We are good to go. Now move to this very candlestick. This one is bearish. The same scenario, there's no different. We have impulse, we have pullback, we have swing high, and the bearish candle that appear engulf that bearish, that's bullish candle. So when this is done, and when this happen on a chart, our bearish engulfing candlestick entry have come. I'll have the other sample 2. We have impulse, we have pullback, same thing, we have swing high, and it was engulfed by the bearish candle. So this is a bearish engulfing entry pattern. So you need to master this very concept. This is the only entry model we got to be using. Anything aside from this candlestick I share with you is out of this strategy. So let's look at this example. You see that price have broken the 50 EMA, and we see lower low and the pullback and the engulfing sharp pattern. See how price drastically, though the movement is not quite sharp, but at least it gave us 1:2. So if you find this entry, you target 1:2, 1:3, depending on your confidence. You have two types of entry trading model of the strategy. We have shallow pullback and deep pullback to the 50 EMA. The last one we share is for a shallow pullback, whereby price break the 50 EMA and the show pullback and the entry model. We got into this. Then deep pullback, got to share the example too. But if you have made this to the extent, why don't you subscribe and like? So this is the last example I got to share so that this video won't be too long. We have a break of structure, and this break of structure is showing us market structure shift. That's an uptrend, and now we wait for market to come back to that 50 EMA. You see how deep the price was. Now this should be your entry, and we target 1:2, 1:3, depending how confident you are and your trading plan for the day. So thanks for watching. That should be our last, but for you watching to this extent, you have a tip for you. So whenever you're trading this strategy, you need to watch for double buttons and fake out. That's the reversal chart pattern. You always check when price have made so long to reverse. Let me turn into support zone. So dear friend, I try my possible best to make this simple. So if you have watched to this extent and you get a value from this very strategy, kindly subscribe, like, so that it reaches to other struggling traders.